The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us out here. We have the Dow Industrials up 62, Nasdaq is up 70, S&P's up 14.5. Gold up $3, traded at $16.06 an ounce. We have silver up 4 cents, $18.19 an ounce. Light sweet crude up 74 cents, trading $52.79 a barrel. Notes and bonds. You get the 10-year down 4 ticks, 131.02. The 30-year off 7 at 162.30. Now, both notes and bonds, folks, they go higher yesterday, have volume behind the move. Pulling back today, contraction of volume. That's still saying they want higher price, lower yield. King dollar is right there, right where, and we're talking about breaking into the higher range. You're laying right on that trend line right now. We're up 180 ticks, 99,620. Euros at 107. The yen is at 110, and the pound is at 129 to 1 US dollar. And if we go over, Tom, to the NDX 100. The way this is trading, it looks like each one of us are going to actually get chipped, because guess what, folks? These chip stocks are just driving this market. Now, Tesla's #1 out here today, up 7%. But ADI, Advanced Analog Devices, up 5.5%. NVIDIA's up 4.5%. Pretty amazing what we got going out here, Tom.
You know what? You joke, but when you talk about the future, why not, right? We're already wearing Apple Watches that track every type of metric, your heart rate, all that good stuff. So why not just something right, a chip right on your wrist, man?
And listen, the way that they're trading, it looks like that's what's going on. This is quite a run, folks. If you want to see, NVIDIA loves to run like this, whether it's up or down. But when you see this, NVIDIA, I believe, is up something like $75 in the last 2 weeks. Let me just look at this again, because this is, yeah, here it is. Okay, so look at this. From February 1st, 235 to 310.
It's remarkable, man. It is. And I saw Tesla at the top there, which we'll talk about, I'm sure, as well.
Oh, yeah.
Another big upgrade from them. And the upgrade, I mean, interesting stuff, but nonetheless, trading in a dramatic price, man.
Huge. It's going after the high volume high. Yeah, the high volume high in Tesla, folks, is 968. It's up $63 right now. You still have about a 15.5%. There it is. It's still 15.5%. Short position.
Do you think Elon regrets doing a $2 billion offering?
Listen, it's amazing, isn't it? I mean,
it is.
You know,
it is.
That's pocket change, no doubt.
And some of the news, let me see if I can find the news. Where's my Tesla? There it is. Okay, because the statement from the upgrade from Piper Sandler, I'll quote it from the Bloomberg article. It's easy to forget that Tesla sells batteries and solar power products. After all, the segment's only 6% of sales in 2019, one analyst wrote Tuesday. But management says that the solar plus storage business will one day rival the automotive segment. And if true, investors will eventually need to pay attention. So, you know, that's remarkable, man. If it's 6% in 2019, and they might be just as strong as the car companies.
And you know what? This is so cool what you're talking about, Tom. So, folks, we're going to go over Amazon for a second. I just want to show you something. When Amazon started the cloud business, the AWS, that's exactly the same thing. Like, they were just a very small player, right?
Yes.
Now, AWS is $35 billion in revenue. Well, that's still only out of 300, so that's still only 10%. That's interesting. Yeah.
No, I think you're right, though. It's a great point. No matter what you're making, that it's a similar comparison. They now have such a leap and bound above it, and that business is just skyrocketing. Super large margin business for Amazon. Yeah, and yeah, I mean, nobody talks about. Everybody loves the cars. Nobody gets to see the batteries inside, so you can't have the hype. But you know, just in the way that you don't have the hype for AWS, for consumers at all. Yeah.
And then, folks, if he gets together the aspect, if you haven't seen these yet, they're pretty cool. He's got these battery packs for houses. The battery pack gets attached to a solar panel on the roof. at this point, they're still a little pricey, but when that comes down a bit, man, I can just picture, I mean, in Florida, I mean, we should have, all of us should have these things.
I completely agree.
Yeah.
Exactly.
I mean,
there's no reason everything, unless you have some kind of deep tree cover, right?
Right.
That you have a solar power panel, without a doubt.
You know, if you've never had it, folks, I've only had it for the pool, but it's pretty dramatic how you actually just sit there and look at it and realize that, oh my God, like the sun is actually heating up the pool.
Yeah.
You know what I mean?
And it can even get to the point, you know, depending on what state you are, and I don't understand the full dynamics of this completely, but you're able to sell that electric back to the electric company, right? Back on the grid.
Yes.
And sometimes you're able to sell it in some states at the same rate that they're selling you.
I know.
Which I think is what you should, you know, maybe there's something, the electric companies argue that they're going to sell you one rate. If you want to sell it back, you got to sell it back at a much lesser rate because they have to keep everything up with costs. But I imagine that they could find a rate that they could go both ways and still be profitable. It's a regulated industry, and that would be pretty awesome if it goes to that fashion.
Yeah, we just got to get, would have to get the lobbyists on our side, which would be really hard. Let's go over to our, yeah, totally. Let's go over to our man, Mr. Kevin Hinks at TD Ameritrade. Kevin Hinks, what's going on?
Good morning, guys. Sorry I'm a little late.
No problem.
How's everything going?
We know you were getting chipped. Everyone's going to be getting chipped, Kevin. All these chip stocks, they're running, man. I mean, we evidently are going to get chips in us like ASAP, man. This run is extraordinary.
Yeah, I'll tell you what, this is pretty interesting morning because, you know, I was on the Future Show this morning with Ben Lichtenstein,
yes.
And I'm telling you, we've been really looking at the relationship between the dollar and gold.
Yep.
And what a crazy relationship that has become. And even when
seriously
all the other risk-off assets, right, like the volatility, the VIX contract and bonds, broke on this PPI number, gold is still fighting against itself. So I think gold is something you really got to watch today to see if this rally has legs. But because gold's been a confusing trade lately.
Yeah, there's no doubt, man. The divergence, what Kevin's talking about, folks, listen, gold is priced in U.S. dollars. The divergence is a monster. You know, and the dollar keeps going up and gold does too. The thing that's amazing, you know, Kevin, even when I was on Ben last night, I was explaining to him, last week rather, that in every currency, you know, every major currency, except the dollar, gold's at all-time highs. I mean, in a huge way, too, not in a small way. So, you know, like we're in a worldwide phenomenon here. Do you know what I mean? And, well, for gold trades worldwide anyway. But it is. Listen, man. Who knows? It's like they're both moving with volume, and I think it goes back to the interest rates, Kevin, because these interest rates still want to go lower. You know, I mean, look at today. We went higher yesterday with volume. Today we're pulling back. The 10-year's off of all of 3 ticks. It's like, really? There's no sellers, man.
Yeah, even with that PPI number,
yes.
Tom, which I thought was a good solid beat. Now over 2% on the year-over-year number, and still bonds don't break hard.
Yeah, no, I agree, man. I mean, it's and sometimes I was saying to one of my buddies last night, I said, I get a feeling that there's just so much cash around that, you know, you got to put it somewhere, man. And so we know they always like to put it in the market, but guess what? They're putting it in metals, they're putting it in the bond, they're putting it in the market.
It's got to be it to some degree, definitely.
They got to love it. Folks, right here, 45 minutes from now, outstanding show. You want to understand the option market upside down. Kevin, you have a great one, safe one. We look forward to the show.
Thanks for having me on, guys.
Thank you.
Thanks,
Stay right
Kevin.
there, folks. Tommy and I come right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Tommy O'Brien. We do appreciate you growling and prowling with us out here. We have the Dow right now up 59, Nasdaq up 69, S&P's up 14. And you know, Tom, when Kevin, you and I were just talking about the gold and a dollar, it's like, you know, this is where you almost can, like, if you were a fundamentalist and you're looking at it like, what do you do with that book? You know what I mean? It's like, okay, sure. It's so unusual. But it is what it is, folks, okay? And they're all different investment vehicles, and it looks like the reality is that here, if we go over to this dollar right now is busting into its higher range. I put this back 3 years. You're going to see it had a big day yesterday. You know, today's not huge, but it's not small either. You know, you're up 200 ticks, and when you get this together, the bottom, oh my God.
I saw it's going to peak above that line, right?
It is. Let me just do it again. What happens, I need a steady hand as I do this, folks, so it doesn't run away on me. But you're going to see that this is, the bottom line is that, you know, you're getting above this trend line. And
definitely. That's the first time, man. We've been watching this for a couple of weeks or whatnot, and it's actually above the trend line, not just above, you know, we could have been looking at the most recent high, right?
That's right. That's right.
And what is that recent high?
99,667. And we hit 99,660, you know. And it's not backing off. I mean, you know, we'll see.
Oh no, it's right there.
We'll see how this shakes out. And what that's about, folks. If we go over to the euro and look at the euro, what you're going to see here with the euro is breaking down. And the euro is 60% of the dollar. You can see that, you know, that the euro had a tough, it had a tough like 3 months here, right? Well, 112, yes. 112 to 107. And what's happened with the euro, and this is where I think that, you know, this dollar is actually going to, you know, get a lot stronger, is that, I mean, the lowest swing point on the euro is like 103. Well, what's stopping it? Do you know what I mean?
Yeah.
There's not much here. So, And you know, gold, folks. If we go to gold, gold's in an ABC up. I mean, we were in a complex one. Bottom line is that yesterday you had the price spread, you had the volume, all of the above. When you see this, what do you see the expansion of volume on this baby? It was a beauty. Yeah, 414,000 contracts. You know, the last swing point here had 321. It's pretty hard to get up to those 400 and 500 levels.
Could you price gold in euros?
Yes. Yeah.
And
GC.
see what we look like, and then maybe see what we look like on like a longer term basis going back.
It's so cool. Where do you see this, folks? Okay. So I got the generic contract up here. I'm going to put it up for 15 years. And then what I'll do is we'll price it in a couple different. Okay, so if you're watching Tiger TV, this is how it is in U.S. dollars. So you can see where we're at with 1602. The all-time high is 1920. Okay? Now watch this. This is where this gets wild. Now we go into the euros. The chart will change, and you'll see how this shakes out. It's just amazing, actually. So the all-time high that in 2000, let's see, 1378 euros. Yeah, 1388 euros was the all-time high in 012 until now. Now you're at 1489 euros versus 1388. Now watch this.
It's remarkable, definitely.
Isn't it? It's like crazy. Yeah. Now if we take it, I'll put it in British pounds next.
Oh boy, some volatility there.
Yeah, when we take a look at the pounds, what you're going to see in the pounds, the all-time high used to be 1204. That's in 2011. And 4 months ago, we hit 1283, and right now we're at 1241. So we're still over it. We're at 1241. Sure. Now, I'm going to put it in the yen. What, wrong one. Close that one. Put it in the Japanese yen and JPY. Where are you? There we go. And then I'm going to put it on the Australian dollar. Where do you see it in the Australian dollar? It's so well the same with the yen. Look at this. So the all-time high in the yen was 158,000 yen. We're at 178,000 yen.
Quite a move, yeah.
And then watch this. This is pretty intense. Let's actually put it on, let's do this one. We'll put it on the Canadian dollar and, come on the Aussie dollar. It's stopping on me here.
I think you got to hit back to close.
Okay.
No, that just, yeah.
There we go. Okay, so now I'll put it on the Aussie dollar. This is like extraordinary. This is like, oh my God. Look at this.
Wow.
So the Aussie dollar, folks, it was 1827 in 2011, which is ours. And the Australian dollar were 2408.
That's about 30% above the high.
Isn't that amazing?
Yeah.
And then let's go to the Canadian dollar. And on the Canadian dollar, let's see where we're at. Okay, so the Canadian dollar, the high was 1902. And we are at 2129. Isn't that wild, man?
Yes.
That's every major currency, folks. You know, that's the bottom line. So, you know, worldwide, you know, it's a bull market period. I mean, even in the U.S. But the U.S. dollar, that's the phenomenon that we're trying to figure out here. It's like, okay, this is not stopping now. I mean, these things want to go. You know, they've caught a nice bid. A few of the equities have really caught a nice bid. So
I mean, it's remarkable, man. When I was doing the updates, NASDAQ, we're at 98, a 98 handle. 10,000 NASDAQ is coming, man. We're 200 points away in a 10,000 point index composed of stocks that do not go down in terms of Microsoft, Facebook, Apple, Netflix, Amazon, Google. Yeah.
Exactly. So I just brought it back to October of 2019, and you're up 2,000 NASDAQ composite points, 2,100 to be exact.
And remember the talk coming into the final quarter? You know, I mean, such a year already for 2019. Maybe keep your powder dry and take some off the table. And no, we're up like 30% since then.
Listen, it's hard to comprehend. There's no doubt about it. And, you know, we know that the aspect of this market's got everything thrown at it. And it's like, okay, man, we're going higher. So it's almost like, you know, we know that the chip stocks have been leading it for quite some time. And then when I look at the chip stocks and I look at Tesla, Tom, it's like, okay, so the way that these self-driving cars are really going to go is that there are going to be chips everywhere, meaning on the roads, on the, you know, self-driving cars, you know, they need hundreds of millions of chips. So it's like, okay, man, that's where this thing is going.
Yeah, I mean, 5G is going to be built out, and a lot of things. I heard the chairman of AT&T, I think, saying one time that, you know, the Internet of Things as it is, everything connected.
Yep.
There's things that we can't even imagine yet in terms of how everything is literally going to be connected on the cloud, you know, accessible, and 5G is instantaneous. That's the type of connection you need for self-driving cars. You can't have any lag, you know, instantaneous connection to everything.
Amazing. Stay right there, folks. Tommy and I are coming right back. We have the Dow Industrials up 79, NASDAQ up 74, S&P's up 16. Come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 72, NASDAQ's up 71, S&Ps are up 15. And, you know, Tom, I heard when you were doing the news a little bit earlier, Blue Apron and Groupon, right? I mean...
Right? I mean, two of them, yeah. Go ahead.
It looks like GPR. We'll Groupon first. GRPN,
I believe is the symbol.
GRPN. When you see this, folks, this looks like to me that they're going out of business.
I would agree.
Yeah, you're down $1.24. You're at $1.80. You bring this back. This is like pretty intense, actually. It's broken everything. So I mean, it's not like it's like, okay, where are you going to go from here? Zero. That's what it comes down to.
Can you go to the issue price for them?
Yes, it was $20, but
so right around where they opened.
I had done that.
Okay.
When you were doing the news. No, I'm going to bring it up. That's the only reason I know it right now.
No, yeah, right.
So if you're watching Tiger TV, what you can see here, you've broken everything, folks. So this is the all-time low, and there's not much left. And if we bring it back to this issue, you see that it got issued November 3rd, 2011, and they sold 40 million shares at $20.
Okay.
And then look, they did a secondary, 13 million shares at $11.80. Pretty intense, right?
It is, man. So what is 40 million shares? That's about 800 million they raised on the first one. They pulled almost $1 billion out, and so that was 53 million shares. Yeah. Can you go to the description? How many shares overall exist? Like how much of the company? I wonder what.
566 million. No, float is only 27 million. No percentage of float. No percentage.
Right.
Shoppers.
But that's just saying that the insiders still had a lot of shares.
Shares outstanding float.
Can you go to the issue again? So there's 566 total shares. Yeah, see, they only sold 55 million shares to raise that money.
Yeah, exactly. So that's interesting, isn't it? Yeah. That's Dave White's slivers. Remember what Dave White talks about, folks, and this is really important, is that for the amount of shares that are outstanding, which is like 10 times this amount,
right? They
only sold a small amount so they can get a price up there and then sell into the market.
Exactly. I was waiting to get there. So that means, there's about 510 million shares that were not issued publicly. I mean, that's got to be either founders, venture capitalists, investors, or the company itself. But a lot of times, those shares are tied up. They push out, and it's a small amount. And I wonder what I'm sure there'll be articles written as this company completely disappears about the that you can figure out what those founders were able to take out in the venture capitalists.
There's no doubt. And if we go to Blue Apron, this one has been a mess right from the start, folks. Okay, this is pretty amazing. The all-time lows today, $3.02. They pushed this out. Remember, they had a hard time pushing this out, actually, because they shares.
Amazing, only 2.5 years ago. It feels actually
I know.
Much sooner, but 2.5 years.
Price split, adjusted split. Look at this, man. Public offering. So I'm not $10 to $150. Is this thing? I got to look at this again. Did they split this thing, and this thing is like a real disaster? Let me look at this. This is crazy. Yeah, they did. Oh my God, this is crazy. So look at this. $165 down to $3.40. Now, if we look at this again, this is a little confusing, folks, but we'll just go through it slow. What happens? I believe this was done not as an IPO. It was done like. They're doing some of these other ways, meaning that they're just bringing them out as an auction bid, and that's why this is set up even differently here. But what it's showing, folks, is that this did a 15 to 1 split. See that $10 to $150?
Okay.
That's sick. That is sick. That means from the IPO price, the people really lost money. Because if we divide that by 15, right? What are it? 23 cents or something?
And I went into that stocksplithistory.com, which I think somebody posted in the den one time about. And it's interesting that it has the date as June 17th, 2019. Oh no, maybe it was. I thought it said 2017. 1 for 15. So I think they might have done a split in June of last year.
And what they had, the reason for that would be to stay listed. That's what ends up happening, because you can't stay under a certain price inside the NASDAQ nor the NYSE. So And this is just a mess. This is like...
Yeah, I mean, the market cap right now, only $45 million. I mean, that's basically probably the startup cost. You can start up your own company
sure,
for far less. And what is Apron?
And they're going to lose $3.83. Now, the question is, do they have $3.83 to lose times 8.2 million? I don't think so.
Can you go back to their revenue for a moment again? Because they're taking in so much less money than they were at one point. I mean, 881 million in 2017. They were climbing towards $1 billion.
Yeah.
And then all of a sudden they're at 450 in last year and 430 this year.
Isn't that amazing, man?
Yeah, and it's, you know, I mentioned in my show, I've done a meal delivery service like that once. It was when I was trying to do vegetarian, vegan for a period of time. I think it's purplecarrot.com. It was good, but they're really expensive, and there's a lot of food, whether it's 2 or 3. I, you know, was single. You have multiple meals. You're paying $75 a week almost sometimes for like 6 servings, right?
Yes.
3 sets of 2 servings per meal. It's just very expensive. It didn't seem like, and the food goes to waste if you don't use it because it's set up.
Right.
Yeah.
You decide to go out with a friend. You get, go out somewhere
Things
else.
change. I ended up wasting plans, and I was like, geez, that week just cost me $75, and I made 1 meal. That's what happens. And so I imagine that's, plus you have a ton of competitors.
And all that is a banana.
Yeah, right, exactly. Yeah.
Oh man, I'm telling you.
Yeah.
Some of these companies, it is what it is, I guess. But that's quite a run, man. You know, if we go over to the XAU, the HUI, what you're going to see yesterday, folks, they ran that baby, and you're going to see this expansion of volume. The XAU right now is trading out at 106.09, and wasn't that much of somewhat 39 million shares. Last swing high there was 32. One before that was 40. So it's not bad. Not as much as I thought we might get. The Gold Bugs Index, take a look at that. We're at 236. And that had a good one. Okay, so that was 30 million versus your swing at 18 versus the high out here of 27. So that's a good expansion up there. There's no doubt about it. Oh, we got to do this. Folks, you're not going to believe this. Okay, Palladium, P-A-L-L. This is crazy. Palladium, this hit an all-time high yesterday. Palladium March, the octave. Wait till you see this. This is like over the top. In 2 days, exactly. In 2 days, it went from 23.31 to 27.55. And 6 months ago, this was trading at 14.59. You're at 26.11. Isn't that wild?
It is. I'm shy. That's quite a move over the last 2 days, man.
Amazing. Stay right there, folks. Tommy and I are coming right back. We're going to get our man Teddy Kagstad on the line. We are going to be talking currencies. Dow right now up 76. Nasdaq's up 70. S&P's are up 15.5. We'll come right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow's up 80, Nasdaq's up 72, S&Ps are up 16.5. Let's go over to our man, Mr. Teddy Kegstad, as we do each and every Wednesday at 40 past the hour. You can reach Teddy every trading day, folks, at forex-trading-unlock.com. That's forex-trading-unlock.com. Teddy Kegstad, what's going on, brother?
I'll tell you what, we got quite the dollar rally going on this morning. That's what's going on.
No doubt. It's jumping back into that higher trading range, man. It just blew right through that trend line, man. It's been taking a while to get there, but it's there.
Well, your favorite market, the Japanese yen. Wow, I mean, we've been saying this market's a bull for quite some time, but talk about a balloon underwater rally today, huh?
There's no doubt. This is pretty amazing, folks. The yen. And the yen right now is at 110.93. If you're watching Tiger TV, I mean, this is a one-way shot, man. I mean, you don't see this too often, right, Teddy? This is
right. Absolutely. Yeah. You got over a full dollar move that's happened since basically like around 8 o'clock last night, I think, something like that.
Yeah. And now this is the kicker. And Tommy and I have been talking about it, and we had Kevin Hinks on earlier talking about it. Gold won't give it up. It's like you're at 1609, man. I mean, it's like everything's going up, right?
Well, I think it's the coronavirus, honestly. It's like we're starting to see some manufacturing things come back online, but at the same token, they're also being disassociated as well in China, you know? So I think it really is being the markets are always forward thinking. And I think right now everyone's looking at where we're going to be at in September, October already.
Sure. And there's going to be shortages, man. I mean, in a huge way.
Oh, sure.
And that supply line it's we'll see it, company by company specific, but there's definitely going to be shortages, no doubt about it.
Sure. Well, and think about this. I mean, GM announced this week that they're cutting. I never knew that GM made cars in New Zealand and Australia under a different name.
Okay.
And they announced this week that they're closing all their plants in both countries. So that means General Motors is no longer going to make cars in 2 different countries completely. And that's a big deal.
That's huge. Now, is that on a temporary basis or, flat out they're just closing them?
They're flat out closing them. Their plan is that within the next year they're closing. And now think about Australia. Between the wildfires, the coronavirus, there's shortage of, they supply basically everything goes to China. And because of the slowdown, look at how they've been impacted. The only thing that's helped this break, you look at the yen chart, it's screaming rally today. But the Australian dollar has been trading kind of like the euro. It's just been sinking and sinking and sinking without any relief, And it's like they just got compounded this week. So I think you're going to see a major bear there for quite some time.
Yeah. This yen is so intriguing, man. I was so paranoid of this yen getting over this 110 but it's not doing anything to the rest of the metals market, which is pretty wild, man. It's like,
right.
Yeah.
You know what's interesting about the yen is that for the past like 6 months, it's been creeping higher. It would get through resistance and maybe get through maybe a half a dollar move at the best, but usually it was more like 20 or 30 pips at best.
Right.
And this thing today, I mean, we have over a full dollar move without any excitement in the world. I mean, I've had an upside target. We've been talking about this now of 112 to 112 half, but it's been with more of a longer term perspective, thinking it would take months and months and months.
Yeah.
I mean, now we're hovering at 111. I mean, that's a crazy move today.
It is, and I guess the news part of it is saying that they think that things are slowing down, so that's why the yen's getting weaker. So we're talking numbers, folks. As you start talking like the 110.94. Higher it gets, the weaker it gets, against the U.S. dollar. So,
right,
that is quite a move, man.
And it's also interesting. When how I like to use currencies as the major indicators against each other and stuff like that, as well as the dollar index. I don't think you can use the dollar index right now as an indicator anymore because the euro is the biggest component of the dollar index to the pound.
Right.
If you look at a dollar index chart versus a euro dollar chart, they're basically an inverse reflection of each other.
Right.
So it's hard to say if you're looking at most of the currencies now, where are they going, on a fundamental or technical basis? I mean, your technicals are overdone in so many currencies. I mean, the Australian dollar, the euro dollar. I mean, if you're a technical indicator kind of person, you've been buried. There's no way that you can look to buy those markets right now.
Right. Right.
Especially with the fundamentals. Like I how I like to incorporate both in all of my trading and stuff like that. This Corona thing, it's I've never encountered. This is not like SARS or anything else that I've ever experienced in 30 years of trading as far as a fundamental that could drive a market the way it is, like the dollar being so strong. I mean, we have the Swiss the U.S. dollar Swiss is hovering, they're not too far away from parity. And the euro right now, usually it bounces where it's at. It starts to consolidate. And right now, every day for 3 weeks, it's made new or move lows except for one day, and it's only had one positive day in 3 weeks.
Yeah. I guess when you take a look at that, right, it's basically saying that things are tough around the world and we are more insulated here, right? I mean, that's what it seems like,
Yes.
Go ahead, sorry.
Well, no, I think your insulation comment is exactly it. And this coronavirus, you see how the world acts in a situation like this. We're lucky this is just a flu virus,
Right.
And what's the sustainability of a country when everything starts to lock up and all of a sudden you have this lack of mobility going on? We live in a mobile world.
Oh, yeah.
And this is like going back to, we're in 2020. It's almost like we're going back to 1990 or something like that, literally.
That's right.
As far as movement.
Yeah. And, what's going to be intriguing is to see that, okay, maybe the aspect of how we're looking at that dollar, we'll have to shift it from the European markets to the Asian markets.
Right.
Because Asia runs everything supply line, folks. That's the bottom line. And the way that currencies are broken down, it's supposed to be broken down as to your trading partner, right? That's how we got to 60% for the dollar, right, versus the euro, right? Yeah.
Well, what's interesting, you made a really good point right there too about trading partner. Very good word. As traders, we trade everything, and we're all about, the more liquidity and the more people involved, the better. We've had for decades a very isolationist view of where goods come from and go to.
Yes.
And I think that this is shown, with all this globalization, the past 15 years, everyone's like globalization, the whole world has to come together. I think the coronavirus has shown what happens when the whole world is completely together. It doesn't work. You have to be compartmentalized. You can't be just relying on these countries around the world. It's just not. It's not sustainable. It's a great ideal, and it works when everything's flowing nice. But we don't even. This is not war that's going on. This is just a disease.
Yes. Yeah.
So.
It's going to be interesting. Now, here's a wild card, folks. Okay. So you got a lot of these factories that have been moving out of China for a while. Let's say you get a monster factory in China. They're making smaller ones in Vietnam, Indonesia, and all these places. But there's a couple of those countries that actually have a lower pay grade than China. So it'd be interesting, like 3 or 4 years from now, like what ends up happening. Do you know what I mean? How much business actually came out of China into those countries? And those countries don't have a tariff coming into the U.S. yet. That's why they're doing it. So that's going to be a wild card. Not now, but 2 or 3 years from now. It's happening for sure.
It's happening. I agree with you. Yeah. I think that's good foresight into what's going to happen.
Yeah. Listen, folks. Every day you can check out
Teddy at Forex-Trading-Online.
Thank you so much. Shame on me. This yen move got me, Teddy.
It sure is. It's crazy.
Have a great one, man. Have a safe one. We look forward to speaking.
Good to be with you again.
Thank you.
Soon.
Thanks,
Stay right
Teddy.
there, folks. Tommy and I come right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metal sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow up 89, Nasdaq up 74, S&P's up 17.5. These S&Ps, they're just hanging at the high, Tom.
Yeah, I mean, I don't see how you would get a lot of weakness coming from these price levels with everything going on. Be interesting to see how the coronavirus shakes out and if that becomes a fading story or if we get headlines more sensational from different countries or whatnot as time marches on.
No doubt. And then this afternoon, folks, at 2 o'clock, bottom line is that we're going to have the Fed minutes, and we're going to see just how hawkish or dovish they were at the last meeting. Now, the way the market's acting, they're pretty, dovish. But we'll actually get the minutes from the 28th and 29th of January meeting, folks. Okay. So,
yes. And one of the things talking about palladium, I was just Googling it myself over the break. and one Yahoo Finance article they had in here. Let me throw up the headline even. So one of the quotes that I liked in here was, the stellar performance for palladium has been driven by expectations stricter Chinese environmental standards will spur higher loading of the materials in cars, draining global supplies that's already struggling to meet demand. Production will trail consumption by 1.9 million ounces this year. It was 1.1 million last year.
And that's a big number because they only mine about 11 or 12,000 ounces a year. That's what's going on. Because what happens,
that is quite a number to be short 800,000 this coming year.
Exactly.
Or, short 1.9 million, excuse me, but a rise of 800,000 even, yeah.
Right, because what happens, folks, is that, so platinum is one of the hardest ones to mine because it's the hardest. And what happens, the palladium is in the platinum mines. So the miners are scared to mine too much platinum because platinum is so low. Isn't that wild?
Okay, dicey. Yeah. How do you get around that, right?
Exactly.
Well, palladium just has to get high enough. They'll start drilling it. That's it.
No doubt. Stay right there, folks. Get Think or Swim coming up next. And I'm Mr. Basil Chapman, Steve Rhodes, Dave White. I'll be back this afternoon. Thanks, pal.
Thanks, man.
Go get him, folks.